Now, India's central bank hiked the key interest rate by 50 basis points to 4.9% in an effort to tame rising inflation. The Reserve Bank of India cited the impact of Russia's invasion of Ukraine on commodity prices as being behind the move, as it raised its inflation forecast for the current financial year. But there are concerns that higher interest rates could have a negative impact on economic growth. Rebecca Bundan has more from Mumbai.
The rate hike by the Reserve Bank of India, or RBI, was widely expected, although the size of the hike was slightly more than some economists had been forecasting. But the RBI made it very clear that fighting inflation by tightening liquidity through higher interest rates was the need of the hour.
Inflation has steeply increased much beyond the upper tolerance level. A large part of the rise in inflation is primarily attributed to a series of supply shocks which can be linked to the war.
The move follows a surprise rate hike by the RBI last month. This comes as India's economy is still recovering from the shocks of the COVID-19 pandemic. But inflation has become a headache in India, with crude oil prices and food prices rising as Russia's invasion of Ukraine has impacted supplies globally. This has led to retail inflation hitting an 8-year high in India. Analysts say that the RBI was left with little choice but to raise rates.
Inflation can become very, very systemic. Inflation expectations can then start rising quite dramatically, and that would have a long-term impact on, on market sentiment, on growth, on a lot of things. So I think it's a very timely thing. I hope that it tempers demand to the extent that is required.
Despite hiking rates, the RBI said that inflation is expected to remain above its upper threshold for the first 3 quarters of this financial year, which started on April the 1st. And the RBI on Wednesday raised its inflation forecast for the year to 6.7% from 5.7%. As a result, economists are expecting the central bank to deliver further rate hikes in the coming months. But many businesses are worried because they are still trying to bounce back after they were affected by COVID-19 lockdown curbs. Higher interest rates increases their borrowing costs, and it means that home and car loans will become more expensive for consumers. All this means that the RBI will continue to face the challenge of trying to control inflation without derailing India's economic growth. Rebecca Bundan, CNA, Mumbai.